Hello traders, Gary Wagner here. It is approximately 12 noon in Honolulu, 5 o'clock in New York on Wednesday, 6th day of December 2023, and this is the Daily Report for Gold and Silver. After extreme volatility, which really began on Friday with a tremendous spike up, and then the action beginning in Australia on Sunday here in the United States, carrying over to a sell-off from the all-time record highs on Monday and continuation on Tuesday. Today, gold managed to settle down and bank a small but respectable gain of $5.80. Basis the most active February contract, we have gold futures currently fixed at $2,043.40. Today's modest but respectable gain in gold comes against a backdrop of a higher U.S. dollar, up fractionally and currently fixed at 104.11, and a continuation of bond yields moving lower. Of course, yields moving lower is a bullish factor for gold, while the dollar moving higher acts as a bearish indicator. Once again, we see gold spiking well above $2,000 as we saw back in April and May of this year. We have settled down, but the one thing that we can say is that after forming a gap, and this is an artificial gap as the continuous contract went from December to February, nonetheless, that gap has been filled. And because the moving averages are all well below current pricing, we can't effectively use that as a level of support. Rather, I use some recent tops. I have major support around $2,000, $1,999.30. It is based on this top right here that occurred in June. What I am labeling as the second level of support is this particular top, and that comes in right around $2,010, with our first level of support at approximately $2,019.30, and it is based upon this recent top. All things being equal, I would expect gold to continue to find support in this area unless we see a major change in the inflationary rate, which would prompt the Fed to change their monetary policy, which currently is to maintain current levels rather than raise rates, as they aggressively did beginning in March of 2022. The next major report we want to look at is going to be Friday's Labor Department jobs report, and then the upcoming inflation reports. Of course, the Federal Reserve will meet and conclude on the 13th next week, and there is a exceedingly high expectation that they will continue to maintain interest rates at their current level, which is between 5.25% and 5.5%. There is, however, one major change that I expect will carry through the end of this year into next, and that is on each occasion in which we saw gold spike higher and then come back down, we saw it come back down well below $2,000 per ounce, and I expect $2,000 per ounce to be major support rather than resistance as it has been in the past. Although gold was able to stop the carnage, so to speak, and have a modest gain of approximately $5, the same cannot be said for silver. Silver continues now in its third consecutive day of declines, today breaking below the 38.2% fib retracement. The data set we are using begins at $21.21. That is effectively based on the October lows up to the recent high that occurred in the same way that we saw gold spike higher at $26.34. The 38% fib retracement occurs at approximately $24.40. The other thing that we want to make note of is the 200-day moving averages. Unlike gold, which has all three moving averages well below pricing, we can see that effectively we have silver just below the longest longest term average that we use, the 200-day moving average. If we see a continuation of pressure and price decline in silver, we want to look at $23.93. That is the 100-day moving average, down to $23.78, the 50% retracement level, as a potential level for support in silver. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.